What are capital allowances and how can I claim them? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Capital allowances, what are they? Well, they're quite an important element of our tax calculation. And what they are is basically in a set of accounts, you will look at your assets, which we'll go on to in a second, and you'll go, I've got all these assets and I want to reduce the value of them. Now, in a set of accounts, we'll reduce the value by calculating depreciation. So check out the video on what is a fixed asset and check out what is depreciation as well. And how capital allowances work is, well, depreciation isn't actually allowable for tax purposes. So they created this alternative, which is called capital allowances. So this is the really important part for what tax you can claim. And you can claim capital allowances on any assets that you actually are buying in the business. Now, there is a few caveats there and we'll go through those in a second, but generally it's any plant and equipment, computer equipment, machinery or vehicles. So there is quite a few things that may be in your business that you can claim capital allowances for. Now, the value that you can claim for generally would be the value that you've used to pay for it. So if you say buy a computer for £1,000, you would be able to claim £1,000 depending how it fits together. And how it fits together is what we are talking about on this video today to take you through how it all works. Now, there is a limitation if your business is letting out residential property, and you can only claim things in the property if you are classified as a furnished holiday let. So check out the video on furnished holiday lettings, which explains exactly what they are and how they work. But in brief, they're basically anything that's available for holiday lettings for 210 days per year and ones that are actually let for at least 105 days in the tax year. So if you are just literally renting out a buy-to-let property to someone, you're not going to be a furnished holiday letting business. You are a residential property letting business, which means then certain capital allowances are more limited. However, there may still be some that you can be claiming. So you can claim capital allowances on anything that fits into the definition of plant and machinery. And luckily, in most cases, what you can claim is the full amount against your profits, which is known as the annual investment allowance. Check out the separate video on the annual investment allowance where we go through a bit more detail on this because it's definitely a worthwhile thing to be looking into. And also at the moment in 2022, there is also something called the super deduction, and check out the separate video on that one where you may be able to even get 130% claimed back. So that £1,000 is suddenly £1,300, not just £1,000. So check those out because that will give you more information on those aspects of capital allowances. Before mentioning what we can claim on, let's just have a look at what you cannot claim on, because this is probably just as important as what you can claim on. So to start us off, the first thing we're going to say is you cannot claim things that you're leasing because you don't actually own them. You can't claim on things that are just for business entertainment. So if you do have that yacht in the marina, no, you cannot be claiming capital allowances on that because it's probably more for entertainment than for work purposes. You can't claim for land and you can't claim for structures, which means things like roads, bridges, things in that vein. And also you cannot claim for buildings, so that includes everything within that building that is, I suppose, screwed down or bolted down. So let's move on to what you can claim for, because there's quite a long list of those. So don't get scared off by the fact that some things can't be claimed. Let's now look at what can be claimed. So things that can be claimed are things that you are using in the business that are held for long periods of time. So think about things like vans or computers or desks or furniture that you are using in the business. You can also claim for integral features, so we'll jump onto that in a second. You can claim for some fixtures in buildings, maybe kitchens and bathrooms, although for residential property that is a little more limited, I will say that. You can claim for some alterations to buildings, although that is a little limited, so you just need to have a word with your accountant about that side of things. And also the cost of demolishing your machinery and plant. So let's jump back to the integral features element. So what are integral features? Well, on commercial properties, these become very, very important, because an integral feature is something like a lift or a fire system, or maybe a sprinkler system, a heating system, burglar alarms sort of systems, all these things that are in the building but not necessarily part of the building that you could take out and you could put new ones in. So anything like this becomes an integral feature, and you can claim capital allowances on integral features. Now, one positive is you can claim these if you rent or you own the building. But the key here is that you are the one that has actually paid for the item. When you are buying a building, you may be able to claim capital allowances on the integral features already there, but you can only claim for the ones that the previous owner has already been claiming for. And one thing to just note is you need to get an agreement from the previous owner to find out what they have claimed and what they haven't claimed, because the claim can only be done once. So if they've already maximised the claim on any integral features, unfortunately there wouldn't be anything left for you. Whereas if they've only just put some of those features in, you may have the whole life of those features still to claim. Now, one great allowance that we have with the capital allowances is something called the annual investment allowance. And I've done a separate video on this on the basis that it is quite a key area of what we can be claiming. So check out how that works on the video. Some other areas that we need to be aware of are some things called first year allowances. First year allowances work in a similar sort of way to the annual investment allowance, where you can claim the full year's worth of allowances for a specific asset, but it's very much more limited to what assets you can be claiming these first year allowances on. So you ask, what are these things that you can claim for? Now, one of them is quite high on the list of quite a few people, which is electric cars. You can claim first year allowances for electric cars. There are a few other areas that you may be able to claim them, but they're very, very niche and specific. So if you may be able to claim these, then I would suggest checking out HMRC's guidance, as they're very niche for this video. If you're thinking of getting a company car, check out the video on company cars on the channel to see whether it may be worthwhile for you and how that side of things all fits together. Now, for certain assets where you can't claim first year allowances, you can't claim the annual investment allowance, you may think, well, what is there left that I can be claiming on it? And this brings us to what's known as the writing down allowance. Now, one area that this fits for is potentially business cars. If you do end up buying a car and it doesn't fit, it's not an electric one, and you actually find, well, actually, I can't claim the annual investment allowance either, then what you're left with is an asset which you can claim capital allowances on, but you have to claim it at specific percentages each year. So for example, you buy a car for 50,000, you can't claim that in full, you can only claim the writing down allowances. What are the writing down allowances then? Writing down allowances work in a similar way to depreciation. Apart from depreciation, you get to choose what rates you use. For the writing down allowances, the tax office sets the rate that you are allowed to claim. With the writing down allowances, there are different pools that you may put your assets into. One is the main pool, one is a special pool, and the other is a single asset pool. So depending which asset class you put them into, which is predetermined by HMRC guidance, will depend what writing down allowance you use. The general main pool allowance is at 18%, so you therefore claim an 18% allowance each year of the asset. So let's start with 50,000 for a car. You claim 18% of the 50,000 as your allowable expenses for tax purposes in the first year, and you keep doing that all the way through until you get to zero. On the special rate pool, it's only 6%. So if it does fall into a different special rate pool, you'd be claiming a much lower allowance. The single asset pools are dependent on what the item is. So depending whether it's allowable for the main or the special rate allowance, it would be 18 or 6%, depending what the actual item is in that single asset pool. There is much more that I could talk about in this area with the writing down allowance, the pools and different things, but that's getting very technical, and this video wasn't intended to be that technical, but just to hopefully give you an idea of how it fits together, so that at least you are starting to get the basics of what capital allowance is in. If you do want any specific videos on additional areas on the pools, then do leave a comment and additional videos can be added in this area. Overall, for any assets you are purchasing in your business, you need to check what allowances you can claim. We've got a few to consider, which would be the annual investment allowance, the first year allowances, and if not any of those, then hopefully a writing down allowance to be claiming tax on an annual basis. So overall, there is quite a lot to be aware of in the capital allowances space, but hopefully this is just giving you a bit of a taster to get an idea of how it fits together. Hopefully today you've discovered what capital allowances are and how they work for your business. Check out the video on annual investment allowance to find out more about this specific area of capital allowances, which is very important to your business. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.